Fed Day, Warriors. Big day that everyone is already knows what's going to happen. Hugo, hey, how are you, Blake? Yeah, happy hum day. Mm, everyone hum. RC, how are you? Bran, yeah, I think get real, man. AJ, Ingmar, what a crew. James Groom and wow, Ryan's here. Wow. We
Oh,
got
why are
Ryan.
you so surprised?
We're we're at
He
we're
was
at
taking
full.
I
his
have
he
one.
was taking his second Christmas break already.
Uh,
Oh, I have one afternoon and one day off, and
see
I'm
see how much you're missed, man.
exactly. Yeah, I'll take it as a
You know.
compliment then.
Yeah, there you go. So let's take a look at what's going to happen here.
We're getting a little bit of feedback here, a little bit of
Yeah,
echo.
I think that was when Ryan was on.
Oh,
Anyway,
okay.
I think it's good now. All right, so here we are. Yields, they're just not stopping yet. I tell you, I think even Jim Welsh is going to throw in the long bond towel uh, right here. I think 89 something. So this is pretty key for the bonds to hold. Otherwise, then this was the end of 4 and this is 5 that's underway. Anyway, we'll see what happens there. Um, I notice EG, at least so far, is trying to put in a higher low. We'll see what happens there. Metals, let's see what happens here on silver. Maybe get a little 3 here. Um, and the yen. When's the BOJ meet? Good morning, K-Man. When's the BOJ meet?
Good morning, good morning, good morning. They meet a few hours after the FOMC. So
Okay. All
3 a.m.
right.
London time. What is that in what 2 a.m., 3 a.m. GMT, something around there. Never a fixed time when they come out with the results, but yeah, a few hours later than after the FOMC.
Okay. S&P looks like it's going to make a new high. It's going to try to get over 6,100. Let's see. And NAS, which has been really ripping, isn't, every day NAS has been twice as strong as S&P's. Today it's not. So, I don't know what you want to take out of it. The dollar, you know, I'm looking at this euro and what do you got, man? You have nothing. It could pop, it could fail. Um, really compressed ranges, so pretty low vol. Um, I have a bias, but it's not exactly like I'm being backed up, looking for a higher dollar with that action. Maybe what we're going to get is this after the Fed. Maybe they won't be as you know, as it maybe won't be a hawkish cut. Um, but the Dixie, you know,
Dale. I was listening to an interview last night with Joseph Wang, who we all know. Love Joseph Wang. He's great. He was talking about just on a quick snippet on Fox News. He was talking about how people misinterpret the Fed because if people think that inflation is so high, they're looking at more of like some of the other inputs and shelter inflation, which has a big lag. So he thinks that the Fed's going to be pretty content with inflation continuing to come down, but also he feels that financial conditions remain really tight, like mortgage rates, credit card delinquencies are high because of rates, and he thinks that financial conditions need to loosen, and he's like, that's what the Fed's looking at. The Fed's not you can look at the jobs data and everything else, but he thinks that the Fed is really more keyed in at other components at this
is
moment.
he
So
I've seen some of his writings too. So I mean, Joseph's great, but what's actionable about what he just said?
Well, what's actionable is the market is really, really thinking there's going to be a hawkish cut. They believe that there's going to be a cut, and then the market's going to reprice the Fed, having 4 rate cuts next year, and thinks that it might come down to like 3. And so if we walk away today, and we believe after today's presser that the FOMC might indeed cut 4. Joseph said that he thinks they could cut as much as 6 times next year, and I was like, wow, that's pretty aggressive. But it doesn't really matter what I think. What the point is if the market believes that 4 rate cuts is still possible tomorrow after today, the dollar is going to sell off. I think the dollar is at risk of selling off, and stocks are at risk of blowing up to the upside into year end. So
Well,
that,
you should be
that's my
buying. Should
that's
be
my take.
buying. Should be buying notes and bonds here.
Yeah,
Yeah.
yeah,
Okay.
yeah,
So all
yeah,
right,
yeah.
that's
So
it.
yields would come down. Yes, correct.
Well, it's a little confusing because he liked Nvidia bearish comment and chart I put out. So is he bearish risk?
Oh, I
And
have
that's
no
why?
idea.
Okay.
He was just talking. He was just referencing the Fed. It was like a little quick snippet
Um,
that I heard last night. And I was like, oh, that's an interesting take. But I think most of us look at the data and we go, well, how's the Fed supposed to be? How's the Fed supposed to be? Really, hawkish, or excuse me, dovish with the data being as strong as we've seen. And
yeah.
perhaps we might be looking at the wrong data points. I don't know. And
Yeah.
this is one of those things that I think the market is leaning really, really far. You can see how the dollar's done against some of these commodity currencies. You got the Aussie and the Kiwi slumping to, in some instances, multi-year lows. The dollar's been pretty damn strong, holding up here at these levels. So, and look at the dollar Canadian, but that's politically infused. It's not, that's not so much the dollar. Well, it's probably a little bit of the dollar, but a lot of Canadian influence there. But anyway, regardless, I think the market is leaning, towards a potential, repricing of how many cuts are coming in next year, and that's, I think, the risk today. So
Okay.
anyway, love to hear
All
the
right.
rest of
So
the guys' views. That was just something
yeah.
that I heard last night,
Uh,
late last night before I went to bed. I'm like,
yeah. So he's a dove on rates, and a lot of people aren't. So that is interesting.
yeah.
So Ryan, you put that in your your salad bowl. What do you think?
I don't eat salad, mate.
All
Um,
right.
as you can see from the videos. Yeah, I think for the Fed today, yeah, there's obviously a few things you've got to look at. Got to look at those forecasts. I think there's going to be a bit of tightening, i.e., compression. We usually get a good spread of the dots. I think they're all going to
Yeah.
be squeezing up closer together. I don't think we're going to get that much of a change for next year in terms of the amount of cuts in the medium. It's obviously a risk, but I don't see us getting a huge change in that. But I think what Powell's got to do, he's got to walk that fine line, not showing that he's too worried about this bounce in inflation because it hasn't got down to target before it started creeping up again the last few months. And he doesn't want to get caught on the hop that they don't get to target and that this inflation bounce is something more. It's very hard to see disinflation continuing when you've got a solid economy. You compare what's happening
Yeah.
in the US to the likes of Eurozone, France, and Germany. France in the PMI, they're cutting prices. Firms are cutting prices to chase business. That's where
Right.
you get a bigger disinflation coming. I can't see that happening in the US. And so, how do you get inflation really back to target without, as they said at the beginning of this hike cycle, maybe causing some pain? So maybe that's the route. Maybe they do want to see some pain so they can get inflation down and rates down. But it's going to be a fight for them and for Powell to get that across tonight, I think.
Okay. I think the dollar's top though. I think part of its problem, which is going to be corrected today, is that they moved Nvidia into the Dow. So I think part of the weakness in the Dow has been because of Nvidia's weakness. I will say that my conviction has been shaken on that. First of all, we filled that gap, and we're up pretty good today. So we're actually above the breakdown. So right now it could be a false breakdown. But I'll tell you something that sometimes um, just having conviction about it, I still would rather be short Nvidia than try and top pick Nasdaq. So we're getting a rally here. Maybe we'll just get some type of retrace of this decline and head down again. But definitely right now it's a false breakdown. But I'm actually looking to add to my position if we get up towards 138 in the next couple days. I still don't think this is a low. But what I counted on isn't there. So I'm just going with the relative weakness. So anyone that followed me on that, some of the other stars are starting to look a little heavy. Here's Amazon. All right, it's just grinding up. Apple's been a star, but after this strength, we're not making any progress. Meta looks heavy, okay, comparatively. Goog was a moonshot, and we have 2 drives. Netflix, it looks like it's trying to roll over. Microsoft diverging. So, the Mag 7 have led the way, and they're starting to have some momentum problems. So, what are we going to do with the yen with the 2 major events today? Is this a sell zone? K-Man, good morning.
Hey, good morning again. I I honestly don't know Regen, but the thing is, I would not be surprised to see, and I come back all the time to those year-end flows, that the market was waiting for the Fed and the Bank of Japan to be over to really kick in the year-end flows. And to my in my like rough calculations, there's still a possibility that there's going to be dollar seller. So as we were talking about it on the Flow Show, and as we have seen so many times over the course of this year, okay, take away August because there's been other factors, but the factor in itself of central banks, Fed and Bank of Japan, have not really caused any persistent yen strength. It's always it come back afterwards, the dollar yen. Okay, I mean you're trading. Obviously, we have like reduced interest rate differentials because the Fed is cutting and other central banks are cutting, and the Bank of Japan is on a very gradual path to higher rates. But the sustainability of the moves has been driven by in some periods by other things. In August, it was the signs of a weakening U.S. Labor market that we had. But look at how it all panned out. Remember the first phase of the year, we were trading 142 in dollar yen. It was supposed to be the year where the rest of the central banks were cutting and the Bank of Japan was hiking, and we are 11, nearly 12 big figures higher than where we were there. That is what I always look at when I look at the yen. Where are the paths and how fast are they going? And I a lot of people don't expect them to move today. I think the chances are more than just those 5 or whatever percent that the market is attributing to it. But I think that there is a very fair chance that the Bank of Japan is not doing 25 BPs, but only maybe a 10 BP or so overnight. And then we may have this effect of the announcement, but will it last is really my question. But again, today and into year end, it's all going to be about year end flows, and I'm leaning towards still a bit of a lower dollar generally.
Okay. Anything popping up for you in metals?
Again, we may be waiting for the FOMC hump to be over. If if they keep more cuts than what the market is expecting right now on the table, then we may have seen the bottom. But otherwise, I'm watching 26, 2026, the figure 25.90 is really my red line on gold. That is my red line. If it goes below there, then I think the party is over. But for as long as we're above there, I think we are correcting at relatively high levels, and there's still an outlook for going higher later.
Okay, back to Ryan, and then we'll hand it to Blake. You doing anything with, that was a great call you made last week, Ryan, at the bottom down here in EG. Huge move. Well, 100 pips. Are we going to go to new lows here, or you think we'll put in a higher low?
That's a good question. That's a very good question. We're trying, if we hold below this 82, 60, 70 area, then we've got every chance of having a real look at those lows. I'd like to see it down to the 82s. But
Okay.
if we pull up around 40, 50, that will indicate buyers stepping up off that 20 low and protecting that low. And then we're probably in for a bit more sideways action. But we obviously got the Bank of England tomorrow as well, yet another central bank. So we'll have to see what sort of mess they dig up.
Reading at the low when you were buying it spot on was 25, which was a confirmed low, which tells me this is not the low.
Yeah.
Okay. That anyway, that something I look for. Markets rarely bottom, but what a big short covering rally you caught there. You doing anything else, buddy? You doing anything with the yuan? The yuan, you're gonna have, looks like you're gonna have another chance above 730.
Yeah, I said, as I said last time, I'm losing a bit of conviction in trading this up the top, given all the news coming out and the market keep pushing, and they want more and more and more from China on the easing front. So yeah, I'm not looking to do a lot up here, but year end, anything can happen. I think if I saw a really ridiculous dip in this one, I might be on the other side and take a long in it. Apart from that, I'm still running a buy stop in S&Ps through 61. When am I running it? Through 61.10ish, because I think if that goes, then we're off to the races again.
I've seen you take those before, so just above the high, you're going to stop yourself in.
Yeah. So I'll be a bit cautious, if it's a bit of a volatility move over the Fed. But if we're closing a day above there, I think it's a green light for further gains.
Thanks, buddy.
Thanks, mate.
Okay. I wanted to ask you, Blake. Are aliens able to sign up for the TFP program?
Yes, aliens can.
I mean, are they considered, if they've invaded the U.S., they can't do a certain section of TFP. They can't be U.S. aliens.
Yes,
They
only extraterrestrial aliens can trade.
Expat aliens.
Yes,
you're
correct.
taking. All right.
The ones that are hanging out in Asia, they can actually they're the ones that can actually trade.
All right, Mork, you're in,
CFDs.
buddy. Mork is in.
Mork is it. All right.
All right, go ahead.
Hey, we're obviously we're tightening up pretty well here in the euro dollar ahead of the ahead of the Fed. Just going back to the conversation we were having a little earlier, I think the market is positioned for some a cut, a hawkish cut, and that's the way I believe the market's positioned, which would suggest that we get, if that does happen, we'd get some dollar strength. And that would put the euro a little bit lower, probably back towards that 104.50 level. But you can see we're tightening up pretty good here in the euro, and I believe it's worth noting, that a breakout's looming for today. One of the big moves that we've seen is we've seen this big move up in yields, and it's actually drugged the US dollar Japanese yen higher too, ahead of the BOJ. I know you guys were just talking about the BOJ for tonight, And you know, we're gonna have that conversation here in just a little bit, because I think it's, you know, not just the BOJ. We got the Bank of England tomorrow. We have the Norges Central Bank. We have the Riksbank. You look at you know, like, just for example, the Norges, you know, the U.S. dollar Norwegian krone. We're actually trying to break this 11.20, like, huge resistance. It's been capping us for like weeks now, and we finally broke above it today. And but the Norges Central Bank is expected to keep rates unchanged, where the Riksbank's supposed to cut rates, and that would put the U.S. dollar Swedish krona squarely into you know, into bullish territory, especially if the dollar does rally today following following the FOMC. You know, if we do get a cut, but markets view the Fed as more hawkish, we could really get a breakout here. So if you guys are, you know, if you guys are dollar bulls, that's one that I would be keeping an eye on, you know, near term. But let's start with the Bank of Japan, and I know you guys had some comments here on the flow show. I had to step away from my desk for just a few minutes. I might have missed some comments you made just a few minutes ago. But Ryan, you were mentioning on the flow show, and for those of you that don't listen to it, you should listen to it in the morning. I try to listen to that as I get up, the recording as I get up every day ahead of this show, just kind of see what these guys are talking about, what's happened overnight. One of the great places of getting caught up is just reading through like the live squawk feed, going into our chat room here, and you know, getting caught up with what these guys were talking about in European trade. That's like what I like to do, is, you know, read some of the comments from Ryan and K-Man here, but also listen to the flow show. So it gets me really prepared intraday for you know, my day ahead. And going back to some of your comments that you were making on the flow show between you and K-Man, you're talking about like some of the end of month flows. If the dollar does, you know, sell off, and we see a sell off here, and let's say the Bank of Japan does, you know, leave rates unchanged, marginally, maybe they raise rates by 10 basis points, who knows? But if the dollar yen does sell off, you are going to be looking to buy a dip at some point. Is that correct?
Yeah, I think after today, after the Fed today, you've got to look at markets completely differently. Okay, after today, you know, maybe the Bank of Japan and Bank of England, we're not necessarily going to be trading fundamentals for the rest of the year. So this is where the risks are that you start seeing some outlier moves. So what you got to think about is, where are the fundamentals, and match them off against those moves. Okay, I see no reason why yen strengthens meaningfully today, tomorrow, even going into next year. Okay, so if we see dollar yen dropping through 150, you know, Friday, Monday, Christmas Eve, whatever, that's going to look a bit of an outlier move. Okay, and so that's going to be something I would look to potentially counter, because I know what the fundamentals are. If it went the other way, if it was going up through 156, 157, I'd be less inclined, because that's the way I would expect it to go on the fundamentals. So I'll be looking for moves that basically go against the fundamentals, whether it's yen, pound, Aussie, zloty, whatever it is. You know,
well, like the euro,
move,
wouldn't the euro be a great case of that? Like, let's say the Fed, let's go back to my previous comments earlier, and let's just say that the Fed does cut. You know, Fed Chair Powell doesn't want to rock the boat. He stays relatively dovish, keeps the door open for several rate cuts into 2025. We walk away and go, shoot, he's definitely opened a lot more cuts than we were thinking. The dollar sells off and the euro rallies, and then we get year-end flows where the dollar, you know, continues to sell off, but just because the stock market's been up 30 some odd % this year. So you see the euro rallying towards 107, let's say. Is that's a trade I would actually lean into that, hopefully at the beginning of the year.
Yeah, I mean, 107 would be a bit too soft for me. If we were 109, 110, and you know, we have seen it happen, that would be juicy. Because you've got to expect we've done nothing but sell off since 112. Okay, over the last couple of months. Yeah. So you've got to potentially, when you get these big one-way moves, Aussie dollar's another candidate. When you get these big one-way moves, you've potentially got to look for at least maybe some profit taking, some of those shorts, you know, just closing up for the year end, booking profits, or just taking risk off the table. So you've got to think that you might get a bounce in that. But as I say, you've got to judge the bounce. If the bounce is a couple hundred pips, then you think, yeah, okay, maybe it's just squaring up. But if it goes more than that, then you got to think, oh right, I'm gonna have a look at that. So yeah, it's about extremes for me. You know,
Yeah,
100 pip bounce
and
wouldn't do it.
and I'm gonna talk to K-Man about this really quick. Thanks, Ryan. You know, just you know, in light of our discussion that we're having right now, you know, we are seeing some of these big moves, and I mean, I've been expecting, you know, some dollar selling into year end. Do you think these are like just great levels of, I mean, if you got to sell some dollars year end, aren't these some great levels to be taking advantage of if you're talking post Fed?
I'd let the Fed come out first.
Of course.
And yes, but also, I mean, I've also said, like, I mean, the models are what they are. The thing is, and I've been talking about it as well, is that if the market is really waiting for the FOMC to be over, and then has to concentrate the bulk of year-end trades into 4 or 5 sessions max, it can get very violent out there. I mean, I'm still leaning towards the dollar sell-off. But if it would be the case that the Fed is the lock, the door that unlocks the year-end flows, yeah, we could have like some really great opportunities coming up post FOMC. Especially if, as you say, they would lean a little dovish, which would be the surprise trade today. I think the dollar will stay supported until the Fed. But then afterwards, yeah, all bets could be off, you know. I personally think it's going to be a hawkish 25, but then that's really the consensus trade. For me, the surprise trade would be that they don't come out hawkish, and that if they keep all the dots where they are, which is virtually impossible, but if they would, I mean, then yeah, the dollar will get a slap around the ears.
Okay. All right. You know, we're just a few minutes. We don't have any data. Oh yeah, I guess we do.
Yeah,
We have building
start some
permits
permit.
and some housing data. I'm not really too concerned about for today. But let's talk about the Bank of K-Man, since you're here and you're chatting. Let's talk about any expectations you have about the BOJ tonight. And will you be up for this? I mean, this is a late one for you guys.
Yeah, as I said, I think the chances for a hike are higher than what the market thinks, despite the messages. Most of the people, well, over 90% of the people now think that they are not going to move, which could see a bit of a spike up. I'd say somewhere perhaps 155 or so, if that were to be the case. But then again, I mean, it's we always have to when at this period of the year we always need to talk conditionally, conditioned to what the flows are going to be, and in my opinion, those flows may be a little against the dollar, but in yen it may be less obvious, because as we were talking, I was looking at the performance of different indices and stuff. They have been running pretty much equal the last month or so to the US, so there may not be that much to do in the end to close the year, you know, or the month. So I'm actually not in a hurry to do anything in the end, personally, on the back of the Bank of Japan.
Okay. All right. Thank you. Hey, tomorrow, actually, before we have the F.A.C.E show, we're going to have the Bank of England. And last night we had inflation data come out. They're basically in line, but there's a couple metrics that missed the mark. How do you feel about the Bank of England tomorrow, Ryan?
Yeah, Bank of England going to be the usual mess. They're stuck in the middle. On one side, they've got sticky inflation. On the other side, they've got weaker growth. What do they go with? They're standing in the middle of the seesaw at the moment, and I feel it's at some point it's going to tip one way or the other. For tomorrow, I don't expect any change to policy, neither does the market. The votes could be important. I think we're expecting an 8-1, with Dinger voting for a cut as normal. The risk, I think the pound moves if it's a bit closer than that, 7-2, 6-3 or something like that. But otherwise, probably going to get a bit of a can kick into next year, and that's when the real problems will step up.
Okay, and K-Man, we saw some interest to buy the sterling a couple hours ago, right at the top of the hour, and you thought that might have been some flow related adjustments there. So
Very much feels like it.
yeah,
Feels like it. We've seen 2 days in a row the 4 p.m. London fixing see a bit of demand come in for the sterling. I've been saying it. It's one of the currencies that I think that could benefit from year-end flows, and I think somewhere Bank of England keeps their hands still, but we're on the other hand never far away from an accident, a Bailey-driven accident. So I really wish the Bank of England was overall ready to support my view and my positions.
Yeah. All right. Well, I hope they're ready to support my positions as well. So, all right.
I think people should not be penny wise and pound foolish.
Oh, there you go. There, bringing out the old sayings. All right. Well, I want to wish everybody a really good luck today. During the Fed, the best place to be, guys, is going to be in the Forex Analytics chat room, especially over the next 24 hours, because we will be covering the Fed. We'll be around for the BOJ tonight. We're going to be around for the Bank of England tomorrow morning, even though this show won't be live because it's going to be an hour before the show, but we'll be in the Forex Analytics chat rooms, chatting it up, talking about everything that we're seeing. So make sure that you guys are in the Forex Analytics chat room. You can see a lot of the side conversations that we're having about the markets, inside of the general chat room, and that's just the general chat room. So make sure you join us there. It's the most active community you'll be able to see in the markets, and being able to talk everything markets as a whole. So and don't forget, we do have our first time we've ever offered 40% off semi-annual subscriptions. Semi-annual, 6 months, 40% off. That's the biggest discount we've ever done in the 8 years of our existence. So make sure you take advantage of that. Best place to be. And Ryan, K-Man, thank you guys for all your efforts. Ryan, I hope you enjoyed your preliminary Christmas holiday, last couple of days off.
Yeah, still feeling it.
I'm going to harass you every time you harass me about Thanksgiving. I'm going to harass you about all your pre-Christmas vacations. All right, guys. Okay. Thank you, guys, and thanks, Dale. Have a great interview with Mr. Peter Goodburn.
Thank you, Blake. Thanks, Stream Team. Good luck today, guys. Kick some butt. And we're going to get some very interesting views from my trading warrior brother, Peter Goodburn. Peter, always great to welcome you back to F.A.C.E. How long have we been talking and batting the ball around?
I'm in about 10 seconds, actually.
All right, that's it. Very good. That's it. You know what? That's how you could tell you have a connection with someone when you could not see them for long periods of time, and that you pick it up right where you left it.
That was the previous 10 seconds.
Yeah, that's right. So great to have you here. Wish you and your family great holidays, and the euphoria. It's interesting. I've seen things like put call ratios at extremes, but yet things like the greedometer not showing excessive greed. I believe that you were looking for this in the NASDAQ, that a lot of things had not completed. And the S&P still has not made a new high with successive higher highs in NASDAQ. Can the S&Ps just clean out stops on Fed Day and trade over 61?
Yeah, I think we're going to have a look at it. I can bring up the S&P actually. Let's have a quick look. see what we can expect. I think today with the Fed coming in, I'm generally expecting a kick higher.
Okay.
So I've had it's a bit of a tweaking problem because we've gone from December to March on the rollover earlier this week, and
Okay.
it's distorted the continuation charts a little bit. Normally I revert back to the cash charts to do that, but I've left it where it is for the moment. But I think a good illustration of that is shown in this relatively short-term chart of the S&P. It's the background chart is 420 minutes. The inset on the bottom right is just a 60-minute chart of the December contract. But just to elaborate the gap, you can see it on the continuation
That's a
chart in the
rollover.
background.
That's
That's
a
the
rollover.
rollover. Yeah.
Okay.
Yeah, it's gapped
Okay.
up. And we had a target prior to that, basis the internal measurements up to about 61.27.5, and we got to 61.11. And then we declined in 5 ways. If you look at the inset chart, you can see the 5-way decline here.
Yeah.
Traded down to 60.39. Some nice fib price ratios there because the 5th wave measures a 61.8 proportion to the net declining ways 1 to 3. So that's good in verifying that as a 5-wave pattern. Then we got a 3-wave rally, very deep one, back up to 61.02. But then we've had a 3-wave structure down to 60.40 last night. And it's obviously held the support and bouncing up. So we think that this is a short-term flat pattern. The December contract gets up to about 61.02.5, and the equivalent March contract will get to 61.69 3/4, which is the same level which I'm pointing to on the December here at 61.02.5. So
Okay,
I
so
think
it's
that
not a new high. It's not a new high.
technically not, no. I don't think it will break into a new high.
If it
And
does, it won't confirm because
yeah,
it's moved sideways. We'll have some non-confirmations.
yeah, I mean, this 5-wave decline from 61.11 down to 60.39 3/4 it's quite clear what that is, really. I mean, I'd be surprised if we made a new high. Saying that, the only way that it could do that is if that 5-wave pattern was some form of part of the ending part of an expanding flat pattern. But it doesn't really show up visibly anyway. I don't think we will. I think we'll get a push up. Now, and reason for that also is corroborated by the fact that if you take a look at the NASDAQ, we've had fits and starts with the NASDAQ. A lot of the hedge funds started selling out in late October through November, and then it suddenly got its heels back and started to rally again and started to
It's been the
outperform a little bit.
star. Yeah, a little bit.
Well, yeah,
bit.
quite a lot. Yeah, quite a lot. And here you can see the recovery from mid-November's low up. And again, you've got a bit of distortion with the gap up from the rollover from December to March. But in actual fact, we're still within quite clear parameters of this topping out. I've got a target here at 22,564, and I've actually broken down a 5-wave substructure in this move up from the November low on a couple of degrees of trend. I can show one of them at this level because it's somewhat visible. If we look at this 5-wave advance, if I extend 1 to 3 within the subdivision of this swing up from November, you can see what I've just done. I've extended waves 1 to 3 by 61.8. You can see it hits that number.
Yeah. What are we, 100 points away?
Yeah, about that. And if we go back to the original sort of July, August sell-off, which is wave A of this expanding flat, if we extend that by 38%, you can see the two numbers crossing over each other. And we call that a bid price ratio convergence metric. So 2 or more overlapping like that will give you pretty stiff resistance. So I think that we're going to get a push up after the Fed announcement. That would take the NASDAQ to modest higher highs, but we won't get that on the S&P. It will technically get close to it, but fail.
So I wanted to ask you, one of my styles, and it's Forrest Gump, is I look for relative strength and weakness. And after the Nvidia earnings, they cleaned out all the shorts, and I started shorting Nvidia. And I thought that we were going to have a breakdown under 132, which, it took it out, but now we're back above it. But, I think the highs are in, don't you? I mean, some things have already topped, um, uh, even though the Nasdaq hasn't. We have housing stocks that have been under pressure. We have the XLI that's been under pressure. So there are some cracks in the market. Breadth, I think we had a period, Peter, of what, 11 days of the market being up with negative breadth.
Yeah,
So, you know,
yeah. Yeah, no, absolutely. I mean, if you look at the SOX semiconductors, they've remained below the July highs. Things like Microsoft are below the July highs. There's
yeah,
certainly cracks appearing.
yeah,
I've always maintained that this orthodox top in July for Nvidia was the top of this 5-wave advance that dates back to 1081. If you look at the bottom left hand, can you see this screen okay?
yeah, got it. Yeah,
Yeah. And you can see the 5-wave advance with the subdivision of the 5th wave from this October 23 low from
right.
39.23. That's also pretty clean and tidy with fib price ratios coming into those numbers. And I think that the following decline, the correction, is an expanding flat. But that would mean that we label, like the S&P and the NASDAQ, this recovery from the August low as either a single or a double zigzag up to 152.89. Now, I was speaking to my colleagues because we have morning meetings every morning where we sort of we have a wave track think tank where we go through different setups. And like you just said on Nvidia, the decline ordinarily from 152.89 seems a perfect setup for wave C to begin to the downside. But we noticed there was a bit of a problem when we looked at the very short-term picture because, and this is one of our worksheets, we can see that actually the decline fits a perfect double zigzag pattern, which is inconsistent with an impulse wave decline for wave C beginning. And so we've been scratching our heads a little bit about this. And you can see that the measurements are pretty good because if you measure the first zigzag decline and we get an elongation with a C wave there, which is, again, a bit confusing because, 9 times out of 10, that will end up as a third wave, but there was never a fourth and a fifth to augment a 5-wave decline from the high, unfortunately. Okay. So, but you can see that if you measure that first zigzag and as 100% value and subtract from the X wave rally, which is basically this pattern, I put X in there.
So does this imply it's an ABC and there's another high coming?
Well, that could be the implication because, this is dropped down now to those measured numbers last night and it's starting to recover. Now, if that happens, what happens then to the larger picture? Well, the only thing that sort of seems obvious to us at the moment, actually, may not have it here, is that it could unfold. Oh, I thought I'd put this in, but no, I haven't. It could unfold as a double zigzag. So instead of a single zigzag from 90.69 finishing at 152.89, we go through a double zigzag. Oh, I thought I measured it, but I remember the measurements coming to about, hang on a sec.
165.
I won't guess, I'll just measure them up. I think we have to extend this by 38%. I just want to make sure I can get that on. So that would take us all the way up to 186.
Wow.
And that, yeah, so I don't know whether that's going to happen or not. I'm still thinking about this because you're catching me sort of an hour after our meeting ended, and I haven't had really time to ingest a lot of the implications to that. But the problem with that, of course, is the fact that the Nasdaq itself looks very top heavy, and I'm not endorsing this idea. It's just something that we talked about in our morning meeting, and we haven't really come up with an absolute conclusion of it yet.
Okay, buddy. I appreciate that transparency. It's an I don't know, and it's wisdom to say I don't know and just wait until you see it. I think I'm going to stay with it.
Yeah, I think, I mean, generally speaking, what's confusing today or looks asymmetrically awkward today can often clear up the next day. Something we tend not to rush things because ultimately things do clarify. The mist does eventually clear and you get a perfect trade the next time, and that's where your leverage comes in. So yeah, I think we'll just keep these aspects in mind, but it's just a bit of a warning that we were prior to this really quite bearish, but this pattern looks a bit strange. Maybe we're reading too much into it. I'll tell you one thing it could be which is very scary, is a fractal series of 1-2s. So you know, you could actually have this as waves 1 and 2 up here, and this is waves 1 and 2. I've put the wrong text in there, sorry. 2, and this could be wave 1 and 2 as well.
Okay. Because
And
it's trading about 33 something this morning. It's
33, 133, yeah.
Yeah.
In the pre-market. Yeah, I mean, okay, that's consistent with both ideas here. Obviously, if we got a 3-wave rally from last night's low and it ended below this secondary low here at 140.11, then you could say, well, then it could collapse. It could just collapse lower, you know. So
okay. Well,
anyway,
enough
so
about
that's
my personal stuff. I thank you very much for that advantage that I have. But you know, why don't we take a look at the dollar and the metals and the miners? Were you disappointed with the performance in the miners, Peter?
well, I was looking at Vale earlier this morning. Wasn't particularly distressed by it. I mean, basically, Vale, though, is coming into some interesting downside targets that we've had down here. We could extend those. We've done a very modest 38% extension down here. The one thing that's very visible, this is Vale basically traded in New York. But if you take a look at the Vale picture traded in the Bovespa, this upswing from 213 up to 23,
Wow.
its equivalent pattern, it looks a little more like a zigzag, which could imply that that's wave 1 of an ending diagonal. And if it were, Vale could drop quite a bit lower and even break below this low. And we're quite aware of those possibilities. If you measure up this to BHP, we've still got more downside there.
Well, you don't consider, do you consider BHP like a pure gold play? Or aren't they, you know, a lot of copper and stuff too?
Copper, really.
Yeah.
Yeah,
Okay.
copper.
All right.
Don't forget BHP, you know, they've been pushing to buy Anglo, mainly because of their copper resources. It's a bit of a, yeah, it's really a copper play.
Okay.
And I think looking at this chart, I don't know where we can put wave B at the moment. It might be that it's just done an expanding flat there and wave C is dropping down now, probably more likely like that. But we've still got get down here. And the thing with copper prices, which we updated in our monthly Elliott Wave Commodities outlook report last month, is that copper still has a lot of downside. And we're getting confirmation of the downside because we've just completed a short-term 5-wave picture down here from a corrective rally that began in November. But this is really bearish. And I don't like copper at all. I think we're seeing the whole aspect of China still unwind. I know we've got stimulus measures in China, but they're not really sort of stimulating domestic supply and consumption. Retail sales were up a bit in China, but I don't think that we're really going to move the needle of any significance in China to the upside until basically the property market has a clean out. And the property market's dropped, about 8 to 9% so far in prices from the peak. You need a lot more down than that to wash out before you.
They're another 20 or 30.
Well, ideally, ideally.
Yeah, I wanted to ask you because it's interesting. I know you're looking for an important low in Aussie, and what you're showing in copper and what you're saying about China would normally not bode well for, or maybe that's what you need to put in a low. It's almost like you can't talk anyone into really wanting to be long euro based on the news backdrop. And, you know, Aussie pretty closely associated with China and copper.
Yeah, well, until you put an analog on the charts and then you take a look at the ASX, for example, versus, you know,
okay.
and versus maybe the currency itself. And then the correlation tends to break down. I mean, we've been looking this morning at some correlations between, for example, 10-year Treasury yields and the dollar, and there's a very strong correlation. And then I was speaking to a client earlier this morning as well from Brazil, and we were looking at the correlation between Bovespa and the latest breakup in the dollar against the Brazilian reais. And the thing is that, you know, you think that there might be positive correlation, but there actually isn't between those currency, between the reais and the Bovespa. There's actually a negative correlation.
Interesting.
And if you take a look at the, we've just triggered alternate counts in the reais because we have actually broken up, and we've got targets now going up. Look at this. This is incredible. We're getting a massive sell-off in the reais, and it's probably going to go up to 7. Before this tops out. This is a monthly chart, so that's pretty long term, but gives you an idea.
And that's a stronger dollar. That's a dollar going up towards, I think you have targets around 109.
Yeah, that's right. If we look at the dollar index, yeah, about, I thought 109, I've looked at the way in which we've moved up to begin minor wave 5 from 105.42 in the last week. I've extended that by 1.618. It probably gets nearer to the 109.95 level actually. So we're going to have a good shunt up for the dollar. I think on the Fed news, yeah, it might pull back a tiny bit, but generally speaking, it's dollar positive.
So we're
across New Year.
All right. So here's something that's probably going to have a lot of people wrong-footed. So, you know, this last rally, this last push up, you know, we're a couple of good days away, although it's quiet this time of year and grinding, that should your scenario in S&Ps work out for, I don't know, it looks like about 20% to the downside, that's going to happen with a backdrop of the dollar heading lower, which is going to surprise people because that's normally they'll look at that as risk on. So can you see that happening? I mean, that's what your forecasts are calling for, a big break in the market. We're not that far away from a peak in the dollar, and the dollar start to head down and the market continues down.
Yeah, I mean, the interesting correlation between those is a bit inconsistent, but what we can say is that the dollar will have to have this run up to 109.95. I mean, that is more interesting when it comes to looking at the 10-year Treasury yield, because at the moment, 10-year Treasury yields, I think they're heading back up to the old October 23 highs at 5%. But the question is, how quickly does it happen? You know, because in the very short term, ideally, I'd like to see a pullback a bit lower than we had during this decline from November into early December, but I'm not sure we're going to get it. You see, if the 10-year Treasury yields pull back down to 4%, I'm keeping my fingers crossed, because I think that the preceding decline from 450 to 412 was 5 ways. But I'm a little bit nervous about it, because I know that the dollar is going to be heading up. If there were a drop down to 4%, then I think the dollar would just have a minor pullback and then we continue up. But the relationship between the S&P is a bit more complex than that. It might be that the S&P tops out and it starts, you know, I mean, it wouldn't interrupt the dollar's flow to the 109.95 area if this suddenly turned down. It's not really going to change anything too much. And this could, you know, the S&P could drop back down to this low at 58.55 and then do a 3-wave rally while the dollar finishes its upswing. You know, something like that could occur.
Okay. I tell you what, it was great talking to you. I think I covered everything, and I tell you, I get Peter's work. It's excellent. And you know, I think that anyone listening right now should consider it. Peter, how they do it? how they go
Hey,
ahead.
thanks. Yeah, thanks, Dale. Thanks for that opportunity. Well,
Thank you for
anybody
sharing your hard work. You're a mad sci you're my friend, the mad scientist trader. All right.
Yeah, I've been called a few things in my time.
That's not bad.
That's a new one. Yeah, well, thanks, Dale. No, anybody tuning in today, yeah, if you'd like to track what we're doing, you can log into and view our latest analysis with the Elliott Wave Compass Report. And we publish twice a week. Generally, it goes out Wednesday night after the close in New York, and also on Friday nights. So you might, depending on which location you're living in, which time zone, you might either sort of grab it sort of Friday night or before you go to bed, and then you've got nightmares, or or you might wake up fresh on Saturday morning and have a look. But it's twice a week. We can generally, this is the main page to Compass. Once you log in, you'll get your credentials to log in, and you can have a look. These are thumbnails, or you can go to the main view online and look at the bigger pictures, or you can select individually. And then you can scroll through a bit like this. So where can you get access to that? Let's have a look. I think that's okay. So this is our wavetrack.com main page, and just go to login. No, go to registration, subscriptions here, and here is the Elliott Wave Compass report. So just go through the normal selection process. You can choose the time period you want and subscribe. Yeah.
Okay. Well,
That would
going
be
into
great.
the new year, I think it's going to be quite an exciting year in the markets. Do you agree? Peter, did you enjoy trading during Trump's first term?
Well, don't forget we had a bull market really in the stocks, didn't we? We had
Yeah,
when just before he was basically
yeah,
the vote came through, the stock market actually sold off because they thought
yeah.
that he was a crazy guy.
Yeah, let it down.
I call Trump the disruptor,
Okay.
because I think it's obvious that the mainstream guys running the economy in the background, and the president doesn't really run the economy. He gets his orders fired down from the backroom guys that you
Yeah,
never hear about. Um, and Trump is basically a bit of a wild card, and I think I call him the disruptor because I think he's disrupting the status quo of
everything.
the guys in the background that are really running the show. I mean, don't
Yeah,
forget, presidents are either only having 4 or maximum 8-year terms. They don't really have the longevity to implement something meaningful in economic policy, and that's the case with a lot of governments around the world at the moment. But you can notice that it's no coincidence since Trump was basically winning the election, that suddenly we're getting a breakout all around the world of unrest in various different places. I mean, obviously Syria has happened after the Israeli attack into Gaza, and then the Israelis extend into Lebanon, and then we get Syria, and then suddenly we get this unsettling sort of period in European economic policy and governments switching around in Germany and France, and then you get South Korea bobbling up,
yeah,
and
it's
then you
everywhere.
get extra rocket attacks with the Russians sending a sort of a nuclear capable missile into Ukraine as a sort of a test to say, yeah, here we are, guys, and then NATO starts saying, yeah, we've got to spend more on defense, and we can't let the Russians do this and that. So it's a complete mess. And I think Trump is actually disrupting the status flow for the guys in the backroom boys. And maybe there's a chance that it enables humanity at least to come to peace. I don't know. I'm a bit quirky on my views on this, and I won't necessarily express them online, but I just think it's an opportunity that mankind can reach out and dissolve all of these wars, and I always pray for peace. So let's hope that there's something in that way planned for us. Yeah.
Okay. A great thing to visualize. And Look, whoever was your team, you have to hope for the success of who's in there. Okay.
Yeah.
Yeah. So we're all rooting for him.
Yes. Yes.
Right. The whole world is rooting for him. So anyway, what was it Shakespeare who said, when the coffers are full, the people cry out for democracy, and when they're empty, they cry out for a strong man. So
Well,
it must have happened back then too.
yes.
Yeah.
And you can go back before Shakespeare and go back to Socrates and start understanding exactly what the difference between democracy and a republic is. I mean, this is also very information if you really want to know and grasp your own freedom. One of the things that I was very impressed with, and anybody listening in, it's just a tip. A guy that I used to respect a lot. I never met him. A guy called Aaron Russo. He actually was the producer of the film Trading Places. You know, the one famous film with Eddie Murphy and co.
Yeah.
But he made a documentary probably over 25 years ago or longer called Freedom to Fascism. And if anybody wants to sort of Google that and look at the video, you can find it free to view on YouTube. Gives you a very good insight. And he's also mentioning the way that the Federal Reserve was actually created back in, I think it was 1920s.
Jekyll's Island. Yeah, Jekyll Island. Yeah.
And he mentions how the vote was cast when most of the guys in the Senate was on holiday at the time, and they got it through to create the Federal Reserve as a private institution, and who was backing that and who was behind it. It's a very fascinating piece of history. Yeah. He's unfortunately, Aaron Russo is no longer with us, but he left a good legacy, and that will give you a pretty good idea of where we're at in internals of politics and so on today.
Right. I tell you what, great talking to you, Peter, and I hope all your counts manifest to your targets. And peace to you and your family. Merry Christmas, buddy.
Yes, thanks, Dale. I appreciate it. And anybody tuning in, same to everybody. And I can see a couple of people on the chat rooting for peace, and I'm really appreciate that very much. It's really great. Let's hope that we all want the same thing ultimately. We all want to be with our families, being a loving environment with our colleagues and friends. Nobody wants war. I mean, you get some crazy people who are acting on our supposedly our behalf. Well, they're not acting on mine, and I bet they're not acting on yours either. So let's hope that somehow humanity grasps the opportunity to overcome this and bring global peace to everybody, and we share everything we have.
How about this, Peter? If the S&Ps don't go to 4,900, I'm going to fly to Germany and kick your ass. And peace be with you.
Yeah, you can do that with pleasure. It would. I get a hug first, hopefully, and then you can do what you like after that.
Anyway, peace to everybody, and profits. Okay, so whatever is happening out there, this is our job to trade price.
Exactly.
And the drama is unfolding outside, but your destiny is unfolding before your eyes, right here on the screen.
Great.
So,
well, God bless you, Dale.
you too,
Merry
Peter.
Christmas, because I probably won't speak to you before then. And God bless to everybody else. And let's hope that we can have some really great trading success for the coming year.
Yeah, let's reap a bumper crop next year.
Absolutely.
So, all right, Peter, thank you so much. Peter Goodburn, everybody. And go to his website at wadefreck.com. Check him out. I read them. I would miss not having being able to read Peter's stuff. Okay, everyone, have a great day. Don't just count your waves, count your blessings. See everyone tomorrow. Good luck with the Fed. I'm looking to fade them. We'll see what happens. Adios. And I'm going to gut out Nvidia. I'm not going to worry about it. In fact, I may use this rally to add to my position. And I'll see everyone tomorrow. Good hunting. Adios. They're thanking you, Peter.
Thanks, Dale.